Are you planning to buy or sell a home in 2023? The housing market has been a buzz for years, but with the new year coming, it's time to talk about what to expect. Will the market burst or bust? Will mortgage interest rates climb or fall? In this episode, we'll dive into the most recent trends to help you navigate the progressing real estate market or the housing market crash. Whether you're a first-time homebuyer or a seasoned real estate investor, you won't want to miss this insightful discussion on the future of the housing market. But before diving into more about that, let me first welcome you aboard for this episode of Finance Arc. On this channel, we set sail on a journey into the vast realm of financial matters, where we guide you through every step of the process and assist you in navigating the challenging world of finance, from simple budgeting advice to more advanced investing strategies. So grab your life vest and get aboard the Finance Arc. The housing market forecast for 2023 is a complex issue influenced by various factors such as interest rates, employment rates, consumer confidence, population growth, and government policies. Given the significant impact that the housing market has on the economy, home buyers and sellers, there is much interest in predicting what the market will look like in the coming years. Interest rates are one significant element that will likely influence the home market in 2023. Interest rates are currently at historically low levels, making home ownership more accessible for many people. However, if interest rates begin to rise, it could dampen the housing market by making it more expensive to borrow money to purchase a home. Employment rates are another essential consideration. If the employment market remains healthy, people will likely continue to have the financial stability required to purchase a home. In contrast, rising unemployment rates may result in a drop in property sales and prices. Consumer confidence is another important aspect that might affect the home market. People who are optimistic about the economy and their own financial situations are more likely to purchase a home. People who are concerned about the future are less likely to make large purchases, such as purchasing a home. The housing market prediction of 2023 may also be influenced by population increase. If the population grows, there will be a greater demand for housing, which will drive up prices. On the other side, if population growth slows, the market may become more balanced and prices will remain stable. Finally, government policies can have a big influence on the housing market. Changes in tax policy or financing restrictions, for example, could make home ownership more or less appealing. Mortgage rates are one of the most important elements influencing the housing market. When mortgage rates are low, it makes it more affordable for people to purchase homes, which leads to increased demand and higher housing prices. When mortgage rates are high, it becomes more difficult for consumers to afford homes, resulting in decreased demand and lower housing prices. The Mortgage Bankers Association's prediction that mortgage rates will gradually rise over the next few years, reaching around 4% by the end of 2023, could have significant effects on the housing market. A rise in mortgage rates can cause potential homebuyers to hesitate or delay their purchase, which can lead to a slowdown in home sales. Additionally, higher mortgage rates can make it more challenging for current homeowners to refinance their mortgages, which can limit their ability to access cash through their home equity or lower their monthly payments. If the rise in mortgage rates results in a considerable fall in demand for homes, the housing market may cool. This cooling could result in decreased housing prices, causing homeowners to lose equity in their homes. For sellers, this could mean spending more time on the market before selling their houses and even lowering the asking price to attract buyers. However, it is important to note that the impact of rising mortgage rates on the housing market is not always clear. Changes in the economy, employment market, and housing supply and demand can all have an impact on the housing market and property values. Home prices are an important factor influencing the housing market. When home prices rise, it makes it more difficult for potential home buyers to obtain financing, which can lead to decreased demand and slower home sales. When home prices are low, consumers may find it more affordable to purchase a home, resulting in increased demand and higher home sales. According to Zillow, the median home value will rise by roughly 3.2% in 2023, implying that the housing market will stay reasonably stable with modest increases in home values. It is important to remember, however, that this prediction is an average and that there may be regional differences. Some housing markets may see more significant price increases than others, while others may see more modest or even negative price growth. Changes in the economy, employment market, interest rates, housing supply and demand, and demographic trends can all have an impact on home values. For example, places with strong employment growth and high housing demand may see stronger home price increase than areas with weaker job markets and lower housing demand. The projected modest increase in home prices in 2023 may suggest that the housing market will remain relatively stable. However, potential homebuyers should still consider the overall affordability of homes in their area, as rising home prices can still make it more challenging to purchase a home. Supply and demand are indeed critical factors to consider when looking at the housing market forecast. The supply of homes on the market has been limited for several years, which has resulted in higher home prices in many areas. This trend is likely to continue into 2023, with demand for housing continuing to outstrip the available supply. There are several reasons why the housing supply has been limited in recent years. One factor is that many homeowners have decided to hold on to their homes instead of selling, often due to the low mortgage rates that incentivize them to stay put. Additionally, home builders have been struggling to keep up with demand, partly due to labor and materials shortages and zoning restrictions. However, it's possible that new construction could help ease the housing shortage in some markets in 2023. In some areas, home builders are ramping up construction, which could increase the supply of homes on the market and potentially moderate home price growth. Demographic changes such as population increase and household formation are another element to consider. As the population ages, there may be more properties for sale as older homeowners downsize or move into retirement communities. Meanwhile, younger generations such as millennials and Generation Z are entering prime home buying years, which may increase housing demand even further. Overall, while the housing supply shortage is likely to continue to drive up home prices in many areas, it's possible that new construction and demographic changes could help moderate this trend in some markets. However, given the ongoing strong demand for housing and low inventory levels, it's likely that home prices will continue to rise in many areas throughout 2023. Finally, the state of the economy as a whole may have an impact on the housing market in 2023. If the economy remains robust with low unemployment and consistent GDP growth, the housing market may benefit. However, if the economy suffers a downturn, it is possible that the housing market will suffer as well. The housing market forecast for 2023 suggests that there will be a modest growth in home prices, indicating that the real estate market will continue to be a safe and profitable investment option. However, rising mortgage rates could put a brake on the pace of home sales. Higher mortgage rates will make borrowing more expensive, which will likely reduce the number of potential buyers in the market. As a result, sellers may have to lower their asking prices to attract buyers, which could limit the growth in home prices. Overall, the housing market is likely to remain relatively stable in 2023, but there may be regional variations based on local economic conditions. Areas with strong job growth, low unemployment, and high incomes are likely to see continued demand for housing and rising prices. However, areas with struggling economies and high unemployment may see a softening of demand and a leveling off of home prices. It is important to note that predicting the housing market is never an exact science, and unforeseen events such as natural disasters, economic shocks, or changes in government policies can impact the market in unexpected ways. Are you ready to take control of your finances? Subscribe to our channel for more tips on savings and investments. Don't forget to turn on notifications so you never miss a new video. Let's grow our wealth together. Stay tuned.